Hello friends, this is your host Rakesh Kumar. In the previous video we had discussed about the bearish engulfing candle. In this one we are going to see a few examples of the bearish engulfing. In a quick time we will do 1 minute for revising what is the bearish engulfing, and then we will see 3 or 4 examples of the same. Just to remind you that if you have not subscribed to our channel yet, then you can subscribe to it now and get the notifications of the latest video uploads. And please consider pressing the like button below the video if you find this video useful for you.
But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started.
Okay friends, what was the bearish engulfing candle if you remember? Okay, it told us that the downward price movement is about to happen. So where does it come, or where does it occur? It occurs at the inflection points, key inflection points. Then only we have to trade. Actually bearish engulfing candle occurs almost everywhere, but the most important ones are at the inflection points or at the key support and resistance zones. Now it tells that the price may reverse or continue. It depends upon the situation where it has occurred and it looks like this. It's a bearish engulfing candle with an open higher than the closing of the yesterday and closing below the open of yesterday. This bearish engulfing candle engulfs the entire candle or entire body of the previous day candle, and then after the price starts moving downwards. That is what we just read in the presentation. So these are the 3 examples, and now we'll try and find some examples on the real charts. Now this is the New Zealand dollar daily chart. I have already marked the bearish engulfing candle here based on the previous resistances and support. You see, this was the supply zone of price. Here the price was rejected, and after this here the price was rejected. The price got a fast break here, but eventually came back in, and again the price rejected here. And this time when I was expecting a rejection here, this rejection was very huge, because not only it gave me a bearish pin bar, it also gave me a bearish engulfing candle. See how the open was higher than the previous day's closing, and the closing was lower than the previous day's open. Now this qualifies as a bearish engulfing candle, and see it is also at the key inflection point, because we see here there was a resistance earlier, so we are expecting resistance this time also. So the price we are expecting is going to head south. So that is why we assume that this is a valid signal, and we keep a sell stop order somewhere here, and our stop loss will be of course above the pattern high. Now what is the pattern high? The pattern high is the high of these 2 candles. Of course it will be this high only, and we will not be opening a trade if we see that there is no potential of moving this trade in the direction south up at least 3 times what we have raised here. So what we have raised here, if our potential risk is 102 points, then we are expecting 306 points as the potential take profit target. Now we don't know what is going to happen in the future, so we will go in the past and see where was the previous support for the price. So the previous support for the price was here in this region. Now we will take a measurement that from the opening price, which is somewhere here, it is 102 point or 101 point is our stop loss. Are we going to get 306 points? Is it possible? So here we see that 306 is possible to achieve in 6967 area. So we have more potential for the targets. So that means it is easy for us to take this risk and enter the trade and see what happened. Did we get it? Yes, we get it. Approximately 306 points we got on this candle, and after approximately 20 periods. That means after 1 month we got 306 picks. Not bad. Okay, so this is how you are going to plan these trades. Right, this is one, and this is the second one, and the second one is in a horizontal channel. I must say it is also known as rectangle. You can see our chart patterns analysis and chart patterns which we have discussed. So this was a rectangle where I spotted that at resistance there was a bearish pin bar forming. It is also bearish pin bar, it is also bearish engulfing candle. So this qualifies for the next trade, and based on this, are we going to trade? That depends upon what is the potential to move in the trend that we are trying to trade, in the direction we are trying to trade. So seeing the previous support zone, this was the previous support and this was the resistance. So I say if we open a position somewhere here, okay, and if we keep a stop loss somewhere here, then what are the chances that it will give me at least 3 times if I risk this much? So there's only one way to check this, that is to measure. Now from here, if I keep my stop loss here and I open my trade somewhere here, then I have 126 points or 125 points of stop loss. So I need at least 375 pips of movement. So 375, oh, there is a potential of price going more than 375. So what I am expecting is 375. So I will keep my take profit target at 1.2627, 1.2627. So this is my take profit target, and let us see what happens in the future. So this target is taken easily, and even the price moves more than that. But you have to remember this thing. There is a proverb in Swiss, or the Swiss proverb that says a greedy person and a pauper are practically one and the same. Now what is a pauper? A pauper is a poor person. A greedy person and a poor person is same. So you don't have to be greedy. Whenever you see your target is getting hit, just get out of the trade. That's all. You don't have to wait for eternity to get out of the trade. Now second example, third example here is that, okay, here is the multiple things. You see, you don't only get this bearish engulfing as the confirmation. Here you get much more than that. Now the price was in a downtrend. From here it got support, then it started moving sideways. But every time the price went to this region, 1.1450 region, it started to get reversed from here. So that was my initial indication. I was expecting something happen here also. I did not get a bearish pin bar or a bearish engulfing at there, but I did get a bearish engulfing candle here. Now you see what I got here. It clearly signaled a sell signal. Okay, now in this case, what was the next area of support? Next area of support was this and this, and of course this down below where I have moved these ellipses. But I still took this trade. Why did I took this trade? Because there was a triple top forming here, and after getting rejected 3 times, it gave me a very small stop loss. You see here, this was my sell signal, this was my stop loss, and if you measure this move, I had a stop loss approximately 141 points, and my take profit was 442 points. Okay, it must be 3 times more than this. Sorry, 140. 4 in 3s are 42. Yes, 420 points actually. 420 points. So this was our approximate target, but we had a resistance or a support zone much lower than that. So it was very comfortable for us to take this trade. So yes, that's it. Just hop in and ride the trend. That's it. But don't be too greedy that the price will even break this support, will break this. No, whenever you find the price at your support, just book the profits, that's it. And when you reach your at least whenever you are in the money, at least equal to the stop loss whatever you have risked, then bring your stop loss to the break even. That is also a very good strategy to manage your risk, and then you will have a free trade to run the ride. Now the last example is in the US dollar against the Japanese yen, which you have marked. It was also ranging, but the range was very precise. Every time the price went to this region, I spotted that it was getting rejected here. It was getting rejected here, so I thought that this time when the price will go here, I will keep an eye on it. And this time when the price went here, I got a bearish engulfing candle with the gap down opening the following day. I could not enter, but the next day I entered here. Here my stop loss, you can see, was approximately here at 114.54 region, and I entered somewhere here. Somewhere here. So what was the potential? The potential was for the trade to go to this region. The potential was to go to this region. So what was my stop loss? My stop loss was approximately 104 points, or you can say 100 points. I was expecting 300 points in this one, but there was a potential for me to go to 400 points, so I entered the trade immediately and took this ride. Well friends, I hope you understood how to trade this. You don't have to open a trade if you get less than 1:3 risk to reward ratio. You will get bearish engulfing candles here and there, but you will trade only you will trade them only at the inflection points. Now these are the key inflection points. Inflection points are the points from where the price has reversed in the past, so you have to mark them on your charts using the daily and the weekly charts, and then you have to trade them accordingly. I hope I have made myself clear. Now I also want to mention here is that it is very easy to just click a button and open a trade, but it is very difficult to manage a trade. Once you have once you have taken the step of opening a trade, it is very difficult to manage it if you have not planned properly. So I would request you to learn all the proper risk management techniques before entering any trade. And a piece of advice from me is that you never put more than 1% of your capital at risk on any single trade, and you have to adjust your position size in such a way that if you lose only 1% of your capital, and if you gain, you have to keep 1:3 risk to reward ratio, so that if you gain, you gain 3%. You lose 1%, but if you gain 3%. That is the key to be profitable in the long run. With this note, I will end this video, and will see you in the next video. Thank you very much for watching.